The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
Hi everyone, Basil Chapman sitting in for David White. David couldn't be here. My pleasure to be able to sit in. My honor, actually, to be able to sit in. And let me tell you something. I'm going to show you right away why it is an honor, why it is certainly both a pleasure and an honor to be sitting in for Dave White today. I heard him the other day talking about, in fact, whenever I look at stocks during my show, certainly on a Monday, I always reference the Investors Business Daily top 10, top 20 stocks. I've been following Investors Business Daily for decades. And what I did is I focused on number one, the first few, but especially number one, which is DDD, 3D Systems. And another one, which was SSYS, which is in the same category of 3D systems. And I've been looking at them very closely. And then I heard Dave talking about that they were highly vulnerable and that he had a position, I believe, in his newsletter. And, of course, Dave White has developed the Power Vector Indicator, just an extraordinary tool. And Dave is our tech guru right here. So when he talks about the high techs, we all listen for sure. And let me show you something. So my service is the opening call. It's a very comprehensive daily service. I go through, or maybe I'll just show some smatterings of it later on. I won't waste time now. But it's called the opening call, and it's a daily newsletter. And I use different techniques. I use techniques that under the umbrella of the Chapman wave. The most simple way of identifying it is you look for the lowest, most obvious low bar and merely count each successively higher peak, and it should take you to at least 4 peaks. After that, there are other techniques to use. That's the simplest. Well, look at this trade. 1, 2, 3. I've developed another way of, it's a variation of the same technique, except once in a while, what you will find is that you will get peak C, the fourth highest peak. Let's say the price goes from 10 to 20, and peak C is at 20. Then instead of pulling back, having a high bar and then a low bar to confirm a peak, and then have 1 penny above peak C to start leg D, and then you expect some kind of consolidation. Occasionally you'll get a miss, but the technicals are failing at the same time. I call that peak C1 and then peak C2. I'm going to make it real simple. Look at this. DDD goes from right here. This is the daily chart. From a low bar of 32.35 back in September the 26th, it starts a cup formation that goes peak A, B, C, and then it goes to a D above the left side higher, 44.80, pulls back very sharply. This is what I call a cup and ladle breakout. It's also like a cup and handle in many ways. And that usually says you're going to pull back. So it pulls back sharply from the 46.92 area down to 36.53. And then it starts a brand new buy signal that goes to a buy mode. Peak A, peak B, peak C. Pulls back quite sharply from peak C. It can do that. I mean, it's a price point of human nature. Remember, that's what stock price is all about. And then look what happens. It goes to D, and then it goes to, and this is the question here. This is a technique that I use, which is called the instant restart. However, I decided that is going to be a peak E, which happens occasionally at 53.10. It pulls back. You see these techniques here at the bottom? This is called the MACD, the moving average convergence divergence, 26.9 of the parameters. And underneath it is the slow stochastic at 14.33 and 1 and 20% and 80%. Well, look what happens. As long as the price is above 80%, I love that for the stochastic. Slow stochastic, and as long as the fast-moving average, the green line, is above the red line, that's already positive. So then it goes brand new, peak A, B, C. Why? Because it goes to a G, but you never get an H in the Chapman wave. So it goes to C. So it goes at 71.98. It goes to peak C1. And then it fails by 9 cents to give me peak D. I call that C1, C2. I was looking at that, and I thought, well, what is going to happen? I spoke on air, and I said, it's getting really overbought. It's number one stock. And I looked at SSYS. That was far better. That gave me my peak F that I look for, which is really where things, if the stochastic and MACD are fading, when you go to the 6 highest peaks, you got to watch out. And SSYS, which is Stratus Limited, goes to 92.30. But I did not put on the trade. I believe Dave did. I'm almost sure I heard him say that he was short. And look at this. DDD goes from the 71 area, 71 to 72 area, plunges to today's low of 56.16. Bravo, Dave White. Bravo, bravo. If that was the trade you put on, exceptional. It was just beautiful. A number one stock in Investors Business Day. You know, you've got to, in my opening call service, we attempt to pick these stocks at the top because I have a technique that takes you step by step to that. I was waiting for that D. I'm not sure I would have shorted it. I think it was on my list. I'm not sure I would have got to it. But it never made it by 9 cents, and Dave's technique just took it. I believe it got an exact, if I heard him correctly, bravo. That is just to take the top stock in Investors Business Day, to short it and get, I don't know how much he got if he got that all the way. But from the 71s down to a low today of 56.16, bravo. Bravo, bravo. That's really... Now, the reason why it was on my list is, look, I had a leg D in the weekly chart going to the high of 71.98. Now it's confirmed, if there's no new high Friday, that it is at least a sell signal. But the MACD is still very strong. You see that fast-moving average there? Still very strong. The stochastic still at 93%. I suspect that there's going to be backing and filling between the 55 area at some point, testing the 55s, maybe going a little lower, but there will be people wanting to come back into the stock, and then we will see. It should fail in a rally round about 65 to maybe 66, 70, somewhere around, if we can even get there, somewhere around there, it should make an arch formation and start to come back down for the retest. Wow. That is beautiful. So let's go through a couple of things here. In my work, I'm just going to run it through here. INDU. Let me explain what I do. I'm looking for peak D from the low bar of 12,883 in the Dow that was made on the 28th of December. We've gone up in 3 legs. I call this the floating letter. So what happens is after it makes peak B, in this case at 13,546.37, it pulls back, has a lower high bar. That makes a peak. 1 penny lower makes a peak. That's how delicate this whole thing is. But it's so simple. And all your obligation is to not miss a peak or a trough on the way down, those little V-shaped things on the lower lows on the way down. So what happens is once the Dow went above 13,546.37, goes to 0.38, that starts leg C. That's the floating letter. And it's still floating even today, when I'm anticipating that we should get some kind of a pullback. However, this is the pattern that I'm showing my subscribers that I've been expecting right here. I'm expecting something to form like this. It's kind of an oval formation. I might even have to raise it a little bit. An oval formation that pulls back. Suddenly there'll be a spike to leg D in the daily, and that could be if there's a lower high bar tomorrow or the next day. There should still be that requisite leg D in the Chapman wave. And that's where you can expect. It depends on how we consolidate over these next 2 days. What if we just go sideways, but we actually do consolidate in a number of stocks that pull back quite sharply? Well, that will say that I have to monitor really closely how peak D, if it comes about, the pullback occurs. What should happen, if I'm correct, is that the bar that goes to leg D should really quickly, either that day or the very next day, close sharply lower, closing at the low, a big red candle, and then the following day should be very negative. That would be going into early next week, if I'm correct in this whole scenario. But I'm not negative. We have 6 long stocks in my opening call. They've done really well up to today. Actually, today I expected that today they would be almost all of them are weak, having had fabulous percentage gains. But we've covered ourselves to a certain extent by shorting one of the indexes. So it's down a little bit, but I have no choice. When the Dow is in leg D, or in this particular case, I anticipated that we would be very close in price to leg D. I wanted to at least have some kind of protection if there is a sudden downturn to our long position. I like to keep these long positions as long as possible. So this is the context that I've put it in here in the my opening call. In fact, I'll just show you a little bit of what I do. Let me go to this here. No, that's not it. Of course, that's not it. So let me get out of that. Right there. So it's going to show up on my right side. So let me go to, for instance, right here. Let me just drag this across right here. This is my opening call. This is just one of the 6 to 8 or even more charts that I show every single day. This is the overview. And here I show that this is a peak E in the 120-minute chart in the Dow. And this is leg C up in the 120-minute VIX Volatility Index. I'm anticipating that there will be a leg D in the volatility index as the market starts to pull back. I don't know when, but it could be in the next few days. This shows you leg C continuing in the Dow, but there was a peak C. So this is actually today leg D in the S&P. Now this is going to be very interesting. I've got leg D in the S&P. I've got leg C in the Dow. I've got leg D in the diamonds. Usually they go together. Let's see what we've got in the SPY. SPY right here would be right there. Let's go to the SPY. SPY. And the SPY is in fact 150.25, 150. This is still leg C in the SPY. So I have mixed notational letters, and whenever that happens, I go with the Dow. The Dow is going to be my benchmark. Look at the NYA, which was in leg D. Let's see what it's doing today. Leg D is extended up. So I'm getting to areas that say, hey, got to be a little bit careful here. Let me just have a drink of tea. And I'll go through this further, but first of all, go to the front page of TFNN. Excuse me. Go to the front page of TFNN. I want you to look and see there's a Tiger and a Great Panthers series silver giveaway program going on. Anyone can win it. Every hour we are giving away a silver bar. And I will have the winner of the next half-ounce silver bar straight after the break. Basil Chapman sitting in for Dave White. My pleasure to be here. I'm usually here 11 o'clock till noon, Monday through Friday.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
White. The Dow is up 17. The S&P is up 717. The Compa Index is down 3 at 31.51. Gold is up 9 at 16.62. Silver's up 60 cents at 31.38. We've got copper up 1 at 97.40. Crude oil up 1 at 97.47. Oh, that's good. I mean, it's good for crude oil. And bonds are down 12.30 seconds at 143.09. And online, we have the winner of the half-ounce silver bar given away from, and this is Great Panther Silver Giveaway plus TFNN, and we've got Michael Coleman online. Hi, Michael. How are you?
Hi, Basil. How you doing? Doing great.
Great. Isn't that nice, huh?
Yeah, it's working out here with the snow. Been snowing last night. Shoveling a couple inches of snow off the ground.
Yeah, we had just a little fuzz, which I got rid of, but I had to get rid of because it was actually icing up. But we're actually going to have some really warm weather. They said getting up into the 60s. Can you believe that? Yeah. We were down in the minuses. It was really cold the other day. So tell me, you listen to TFNN. How did you hear about it?
Well, I enjoy the program a lot. Been listening to it for a few years. Watch it at home when I get on the internet, put on the headphones and watch you guys. It's real nice being able to look at the graph. It's easier than reading books.
You know, it's so interesting you say that because for a long time I was doing this, and then I started to show the charts more and more, and people, as they got to see the charts, because you have to use a lot of words to explain, even when I talk about a peak or a trough, look how many words you've got to say. A peak is when there's a lower high bar. You even have to say a high bar, because it's not a lower high. It's the whole bar has to be lower. So you have to use so many words. You look at one picture and you can just see it right away. I agree with you. And, I tend to watch, I watch it as much as I can when I'm not on the road, but if I'm out there, like sometimes on a Wednesday afternoon, I'll go out for a quick game of tennis, and during the game, I'll be looking to see what's happening. My partners always know I'm always checking the score as well as checking the market, and it's just fun. It's just so great. And you know what I love? I don't know about you. I love all the different opinions, and then you can just siphon out what kind of fits what you're thinking, what techniques you can use, and there are so many techniques that people discuss here. I found that I've learned a lot. I mean, I love it.
I do too.
So, is there any particular stock that you would like to look at?
Well, this one I've got into last month is the SPF, Standard Pacific.
Oh, that's the home builder?
Yeah, I got into it around 720.
Wow, nice. Folks, this is what we're looking at now. When you're looking at Tiger TV, if you see that all these little letters pop up on the stock, it doesn't happen by magic. It happens because I did it. This is a stock that I've been following, and it's very interesting that you mentioned this one, because I was discussing earlier on my show, someone had called in about CRM, which is Salesforce.com, and I said we can make it real simple, or there's a slightly more complex wave count unfolding. Well, this one also has a slightly more complex wave count unfolding in the daily, but I have to tell you that there's a technique that I love. I don't know if you ever used it. I use the 9-period exponential moving average. In other words, it's a daily, in this case, it's a daily chart, so it's the daily EMA, the 9-period. And if you look at that, look at the way the stock has just walked along that line. I call it walking the 9 EMA. It's as if it's like a staircase, and it's just walking the staircase as if nothing's going on. In fact, it looks like an escalator here. And it's trading at $8.43 SPF. So you got in at a really nice price. I'll tell you why I think it's such a nice price. In the below 7.80, I think there's a lot of support in the 780s. So the 772 level is the 9-period exponential moving average support in the weekly chart. But the weekly, another two techniques that I use are the MACD. I don't know if you ever used that, the moving average convergence divergence, and the slow stochastic. Do you ever use those?
Yes, I do. Uh-huh.
Okay, well, you'll see that there are a number of techniques that I use in my opening call, my daily service, and when I give my seminars and webinars. And one of the things I discuss is the 200-period moving average. In this case, it's at $5.92. It's the yellow line. If you're looking at Tiger TV, the middle chart here is the weekly chart. It hit it exactly a week of the 16th of November, and then it started to rally, and it made a beautiful cup formation, and the cup formation is broken above 792, the high of the 21st of September, and it's in leg C. I'd like to continue this analysis if you don't mind, because I think you've got a really nice stock here. Do you mind holding?
Sure.
Great. Folks, we got Michael Coleman, the winner of the half-ounce silver bar, and we will be back straight after these messages. Basil Chapman sitting in for Dave White.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insights subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
With Michael Coleman from the Colorado area. And don't forget, this coming weekend, I believe it's Denver, February the 2nd, Dynamic Trading Strategies free live workshop. Go to the front page of TFNN to see that Tom O'Brien and Daryl Martin are going to be giving a free workshop, 4 hours, right there, sponsored by Nadex. You heard Daryl just before this show, just a fabulous show. Just this, it's a great technique to be able to confine, to limit your potential loss and to maximize your potential gain. Just it's a fabulous way of doing it. So we're going to go right back to Michael, because Michael has a stock that he's got. SPF is the symbol. It is Standard Pacific Core Home Builder, and it's doing beautifully. What I have here is that the daily, I'm not going to make it complicated here in the Chapman Wave, the alternate counts. Right now it's either B or D, but the fact is that my 120-minute chart says it's getting a little toppy right here, just on the shorter term, 860 8:15 is the support. It's at 8:38, but it should hold 790 to 780 on any pullback. He's in lower down. But what's really exciting is that my weekly chart, the stochastic and MACD, these are two technical indicators I use, are so strong that they're suggesting that this is leg C in the weekly chart, and that if 4850, that this leg C should go to a leg D eventually, just as it went to a peak D in the week of the 21st of September. Most importantly, although the monthly is just a horrible chart, this is a star, I remember this so well. Back in 2005, it's trading at 49.70. I got a feeling this is the one that split about 10 times or something. I think this is the one that was up in the 500s or 700s or something, one of the most expensive. However, whatever happened, it came all the way down to 65 cents and is trading now at 8.30, and the monthly chart is in leg C. So I think you've got a great entry and a great price. I just wanted to go through the technicals that I'm looking at based on the Chapman wave to say it bounced off the 200 period moving average perfectly. It's made a beautiful cup formation. It's broken out in that pattern that I call the Chapman wave cup and ladle. That's where it doesn't stop at the left side high. In this case, $7.92. It went right through it. That invariably says, look, because my work does forward-looking projections, it says it should make a higher high going to leg D at some time in the coming months. So I like it. I think you got a great entry. Congratulations.
Thank you.
And I also want to congratulate you on being the winner of that half-ounce silver bar. That made your day.
Can I ask you about one more stock?
Oh, sure, why not?
I've been keeping an eye on Sony, and unfortunately I missed the leg up because it was trading right around 10.5, 11, and then in the last 4 days it jumped all the way up to $15.
The speed of this move up, I think Nokia did the same thing. This is, and what you call it, the one that got beaten to death, RIM. So Sony was down, and there was a beautiful, I call this a silent candle. This candle on the 4th of December, the low was 960. The next day, the low was 957. So you wouldn't have seen it if you were scanning for certain types of candles because it was hidden away. And then it went, and I'll type this in. It goes, is that the low or is that the low? Let me just double check here. So 959. The low here is 957. Correct. So we go peak A. This is how simple the technique is. A, B, C, D, and this is spiraled up. Now, in this particular instance, I wouldn't be worrying about the gaps per se because it's a foreign stock, and foreign stocks tend to gap up because they've got all this currency stuff as well as trading overseas. It could have been trading in Japan when the market here was closed, and then it opens and gaps up. This is leg, I must double check, might be covered here. I think this is leg C as well as your other stocks. So this is 10, 11:30. Yes, this is leg C in the weekly chart. The monthly is, if I say horrible, I thought SPX was horrible. This is terrible on a monthly basis. But you know what? You might have got the first decent turn up that it's had in a long time. So, you haven't got it. I shouldn't have said that. No. Sorry about that. Yeah. You know what I'm going to suggest? Have a little patience. Keep in mind that $14.70 to 13.15 is the area that I suspect is going to be the big test of this particular up move. If you have the patience, there are two ways of doing it. One is it's done fantastically. The weekly is still good. It should go higher. You could just nibble at it now. This isn't your position. This is like 20 shares or something like that, because your other position is going to come on later. That's one way to do it. So either you want to just nibble at it here at 15.08, saying, you know what, it might be able to go to 15.63. SNE is the symbol, trading at 15.08, down 3 cents. Sony Corporation, ADR. But the main thing is I would want to see how it tests that whole area underneath 14. If it can find some support there, and it can do that for a full week, without making a new high next week, I suspect by Thursday, a week from this Thursday, If that's the case, it will be digesting its gains, and somewhere there you could start a position, and that position should take you to leg D, and that should be higher than whatever C is. If it's this week, that is 1549, or if it's a little higher than that. But the monthly chart is the one that says 13.37 is the 9-period moving average. That has to hold on a monthly basis. The weekly charts is 1254, 9-period moving average. I don't think it's going there right now. But the daily says 200-period moving average at 13.15. So that whole area between 1337, I'd say 1366 to 1315, that's the area of consolidation. And I would be considering starting a small position there. And if it manages to hold without breaking under 13 for 5 out of 7 sessions after it gets there, but instead is going up to the 14.60 area, you might want to add just a little bit more to the position. But it's obviously right now it's somewhat overbought because it's just a vertical move. That doesn't mean to say it can't go higher. It just means that your risk reward is greater, as you know, because that's why you haven't bothered to get in right this moment. So either you nibble just a tiny position because it gives you a great feel to actually have the stock, knowing that you actually want to put your position in lower down. This is just a pilot light. Even if it goes up from here, I still expect that your nibbling position right now will lose you money over the next 3 to 5 sessions. But you really want to start your position a little lower down and see what it's saying. You know, my show is 11 o'clock till noon, Monday through Friday Eastern Time. So we have wonderful listeners out in Colorado. I mean, one of our most faithful parts of the audience in TFNN comes from Colorado. We have a lot everywhere, but that Colorado crowd has they devoted to TFNN. So if you are able to listen and maybe give a call, we can look at it again, maybe Monday or Tuesday of next week.
Sounds good. Appreciate all your advice and everything. You guys do a great job.
Thank you very much. I appreciate you calling. And once again, congratulations, Michael, on being a winner of our half-ounce silver bar given away by the Great Basin Silver. The Great Basin. Did I just say that? That was not right. It's a Great Panther Silver. Sorry, that was my mistake. So I hope to hear from you soon. Thank you, Michael.
Thank you.
So, folks, let's do this. It's now an hour and a quarter before the market is going to close. You can see that this is now a rotational market. We've got news of stocks like a VMware, VMW, just 20% down. BAP, just like that. You've got other stocks that have had good news to the upside, ISRG, Intuitive Surgical, whoosh, to the upside. So this is a very diverse market. What I've tried to do, at least for my subscribers, is to pick stocks whose weekly charts have been improving tremendously. I know that they are all getting to an area where, yes, there could be somewhere in B, somewhere in C, and somewhere in D, so it's kind of a mixed bag. So we could have a nominal upside to over the next few days. I'm expecting them to come back down. I would have loved to have had 2 positions, a trading position and a very short-term, intermediate-term position. I would have taken off yesterday at the close or this morning at the opening. Whoosh, I would have taken off a bunch. But we don't. I like to have what I call small positions in a lot of stocks. And it's like a portfolio that we have. We have 6 longs and 1 short position. 1 short position is going to be a kind of a caveat for a market turn to the downside. At this point, I'm really only expecting maybe 3%, 4%, maybe 5%, if it even works in the next few days. But the most important aspect is that there are stocks that are acting beautifully. There are some stocks that are just... They are going up. I think Dave White would be the perfect one to talk about here. It's on thin air. There is nothing there. There is no volume. And they are kind of vulnerable to some selling by mutual funds. What I'm expecting here is that we're going to have some spike to the upside, and that spike fails, and we start to come down. So next week, as I'm looking at it right now, I am anticipating weakness. I still expect there's a rotational weakness. Why? Look at the Qs, 1, 2, 3. 1, 2, 3, not 4, 1, 2, 3. You see how the Qs are holding up? You see this oval pattern? If you're looking at my charts, the one on the left is the daily, this is the weekly, and this is the monthly. Now, the daily says there's an oval formation, And if there was a break on the downside at 67.12 right now, down 3 cents on the QQQ Trust Series, if 66 is taken out at any time by Wednesday or Thursday of next week, we will have a weekly sell signal, not a sell mode, just a sell signal, at the very quickest, one of the quickest, peak A to B to C to D in the Chapman wave. Certainly if there's no new high bar this week above 67.79. And that says be careful when there's a very quick series of peaks, 4 peaks that goes to D. You can have a quick pullback. It's not a major sell signal or anything. It can turn into, but usually all it says is, whoosh, be careful, it went up too quickly. And what's happening now is you've also got to see that it's only from 61.31 to the high of 67. That's 10%. That's a very small number in the QQQs because, of course, before they were being helped by what? Apple. Well, what's going on right now is that Apple is assisting instead of hurting. As I said to subscribers this morning, I was thinking of going along Apple. I just, I think 666 to 668, maybe 674. I can see the upside there. I didn't want to confuse my mind. We've got 6 longs. I don't like to have many more than 6 positions. I've got 7 altogether right now. I just didn't feel like adding anything now, even if it was a short-term counter-trend rally. But Apple looks to me like the selling is done, at least just for right now. It's going to try to fill the gap, and then it's going to make an arch formation. And that arch formation doesn't say it has to come back and break the round number 435 low, but it says be careful. It could come back, and that pullback could coincide with the general market malaise and kind of pullback coming next week. So that's my outlook there. I'm going to go to our next caller. We've got Robert in Chicago. Hi, Robert. How are you?
Hi, Basil. How are you?
I'm well, thank you.
So, Basil, I was wondering what your take is on Whole Foods Market, ticker WFM.
Okay, and you've been patient because you've been looking at this and you're wondering whether it's going to be a short. Is that correct?
No, actually, I'm not.
Oh.
I'm wondering if you think this will go above 102 and if I'll have an opportunity to go long.
Okay. Yeah, I want to look at it both ways, and I tell you why. If you were going to say short, I was going to mention to you, although it's in leg D with the doji candle from yesterday, so that makes it almost certainly by the end of the day it's not going to make a new recovery high. I doubt it. That would be really unusual. That would take it above 96.73. What I am looking at is that the series of H patterns that become an M pattern with a successful test of the low of 85.70, and we have been short periodically the stock, usually with just a small gain or a small loss. Haven't been able to knock it out the park yet. I'm hoping we will at some point. The stochastics at 93% and the MACD's expanding. I do not fight this pattern. It's like a very big H formation, lowercase h formation, that can turn into a very powerful upside formation if it takes out the left side high bar, which it did, which was at 93.25. So I'm looking at it and I'm saying, wow, that is really impressive. It took a sideways consolidation, and as you heard in the Qs just now, I said the Qs made a very quick peak A to B to C. This is making a very quick A to B to C. The Qs went to D. This is still in C, but unless the MACD, the fast-moving average in the weekly chart, crosses positively, I have to be a little careful because it's peak D at this particular point. Now, if you had asked me to go short, I would have said to you, I cannot. The risk-reward is there because it's at 95.44 and 96.74 could be your stop. 2 points, 2.25 points. For a $95, $96 stock, that's not bad. But I don't think I want to be looking at this right now as a short. I want to do it just almost the way you're looking at it. The weekly chart has made this rectangle formation. Stochastics, okay, not great. But I am kind of impressed so far with the monthly chart. There's a technique that I spoke about a little earlier on where the price walks the 9-period exponential moving average. That's the 9 EMA. In this case, it's the 9-period monthly exponential moving average. I will talk more about this, and as soon as we get back, we've got Robert in Chicago looking at Whole Foods Market, WFM, down 93 cents at 95.40. And we'll be right back. And Mohammed in California.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Robert, this is what I'm going to suggest. So you have no position right now.
That is correct.
Okay. Because I think it's in a trading range, all I can say to you is that it might be quite difficult. Although the stochastics at 93% in the daily, the weekly is still it's really not very strong. And that monthly I'm watching so closely because at a peak F top, which it made at 99.86, I watch that very closely because if it starts to close underneath the 9-period moving average, underneath 90, that'll say, uh-oh, watch out, Whole Foods is going to pull back. So here's what I'm going to suggest to you. Let it come back down. Give it a few days. If it goes to the 94.50 to the 93.20 area and holds quite well, and the general market, the Dow is not broken underneath 13,820, 13,800, and the S&P is not underneath 1495. In fact, both of them are holding quite well. Then I'm going to say to you, you might want to nibble on a small position, a very small position, round about that area, but you're going to have a very tight stop, because if it closes under 93, I'd be real cautious. However, if it starts to push towards the 96.38 area, all it has to do is break above the candle of yesterday, 96.73, and that previous high of 99.86 becomes the potential for a double top. So you don't get many points. But if, for whatever reason, it breaks out into the 97, 98 area, Whole Foods will find a whole new slew of money managers buying it. That's the only thing I can think of. If you ask me what I would do, I would just hold off. I would have patience, not to be long, not to be short. Just for the moment, I want to see what the market does and what Whole Foods does. So I'm just recommending hold off, see how it holds the 94.30, maybe 93.50 area, and then you can see. And if you want, give me a call in my show, 11 o'clock till 12, if you're around Eastern Time, maybe Friday or Monday. We can look at it again. Thanks so much for calling. Let's go to my pleasure. Let's go to Mohammed in Glendale. Hi, Mohammed. How are you?
How are you doing, Basil?
Very well.
Great. Just quick thoughts on POL.
This is Poly 1 Core, resonant polymers for industrial sector. It's in an up channel in the monthly. It's gone to a brand new leg B. MACD and stochastic are fabulous. This is one of those in the IBD that's done very well. My weekly says this is leg E. You've got to be a little bit careful here. And my daily says this is probably peak D. Do you have a position?
No, I don't.
Okay. I suspect this is going to pull back. I wouldn't be surprised if by Wednesday a week, by tomorrow a week, we're looking at the stock that is between $21.20 and $20.35. If, in fact, it hasn't come down that far but is holding beautifully at the 21.75 level, doesn't break 21.54 a week from Friday, this Friday or the next week, then I would say, wow, that is really impressive. But I suspect it's going to pull back for a little while, and I wouldn't be surprised if it tests between 20 and 19 over the coming week to 10 days. If it doesn't make a new high in the next 3 days, above 23.53, 23.60, I suspect it's going to be pulling back, and then I would look at it as a long position, somewhere in the 19s to maybe $18.80 if it can get there, but somewhere between 20 and 19. That's where I would look at it as a potential long. So I hope that helps you.
Thank you so much, Basil.
Okay, thank you so much for calling, Mohammed. Folks, Basil Chapman signing off. This is, in fact, Dave White's show, the Power Trading Hour. My show is usually 11 o'clock till 12 Eastern Time. Thanks for being here. Stay tuned for Ken Shreve. I'll be back tomorrow.